Buddy, I just wanted to come out today. Today is Tuesday. I missed you guys the last 2 weeks as I was actually not feeling too well. I'm just getting over the illness, but I thank you guys for liking, subscribing, and following us on YouTube. As you know, I'm the financial guy. I get the opportunity once a week to come on and talk about finances. Again, all my opinions that I make about finances are actually my own. There's no reflection on CFS Studios. This is an opportunity for me to actually talk about the things that I see in the marketplace, have a little fun. As you know, we get back to our regular show on Wednesday when I go about my stock watch list. It's been some time since I've spoken to you guys, but I wanted to come on today because people had asked me. I read a couple of emails, and you basically stated, hey, what is going on with the banking system, or at least the regional banks? As you know, it is not new. Things took place on Friday, but I don't think you actually understand everything that took place. For example, HSBC actually took a position and bought assets already. That's right. The Chinese bank itself, HSBC, they actually took position and bought some assets. Here's a couple of banks that on Friday was halted, in case you guys didn't know. I want to go over a couple of the lists. Now, we know about Signature Bank of New York, and we know about Silicon Valley Bank. The regulators actually took over those banks. Signature Bank was taken over on Sunday, as a matter of fact. It didn't even make it to Monday morning. But as far as on Friday, Silicon Valley out in California. But did you know that on Friday, Schwab's was halted? That's right. Schwab's. You couldn't even trade it. It actually got halted. Do you know what else stocks got halted? Here's a couple of them, and these were regional banks. Here we go. We got Pacific Western Bank. The stock was halted more than once. We have First Republic Bank. That stock was halted as well, more than once. We also had a situation where Commerce Bank and Western Alliance Bank, these are all regional banks. All of those banks got halted. You couldn't even trade them. Boom, that was it. They wouldn't trade for the day. So if you're thinking what took place in the marketplace, what is my opinion on the matter? It was very interesting. But let me just kind of bring you up to speed. Not going to talk long today. Tomorrow is my day where I go over my stock watch list. But I do want to give my personal opinion. And again, this is my personal opinion. It's no reflection of anyone else other than myself. And that's this. One of the interesting things is that even though they're not going to say this, banks normally start to default, especially when rates are being increased like this. Regional banks. Now, we know the big banks. Now, we're talking about like the big ones, JP Morgan and such. You got Citigroup, the ones who got bailed out last time. And when you go back, you look at the Great Recession of 2007. One of the most profound things that I can tell you, though, is that when you start seeing banks default and they can't meet their regulatory requirements, one of the reasons is this. For the first time in my lifetime, the Great Recession was more of the shadow banks, which are regional banks that's totally concentrated in. And being that Silicon Valley Bank, what it was concentrated in, and then Signature Bank was actually cryptocurrency, and Silicon Valley Bank was actually startups and techs. They were very concentrated. And when you were concentrated like that, you were totally committed to. Now, they did have treasuries, but it was a bank run. Now, unless you're in your 40s, it's been some time since you've seen a bank run. But this bank run was different because now they actually know the power of social media. This is the first time in American history that social media, through Twitter, text messaging, and email, caused a bank run that happened so fast, nobody was ready for it. And that's the power of social media. That's what makes this unique. Several of the big hedge funds that are actually early stage investors in the tech, as well as even with Signature Bank being exposed. Now, this is not all of them. I want you to know that in the UK, there also was situations that if you was actually on the FTSE 100, several regional banks as well got halted. So this was not just something subjective to the United States. Actually, it was something that was beyond just the US itself. Other banks were affected. But what can I tell you about this situation? One, you just have to understand that this here is another form of government intervention to allow the banking system to be bailed out. Now, you may disagree. Again, this is my public opinion. It's not. It depends on who you are. You make it subjective, but it is a form of a bailout. And let me explain what I mean by that. There's one thing to actually deal with depositors from 250 or less. The regular consumers, you and me, who have a checking and savings account, a person who has a small business, and they got 250 in their payroll in there. And they probably have, and some of them got payroll on a loan. So they got a loan or either on a POS system or just through the local bank, and they got a line of credit at their bank, and they got a company credit card that they may pull off to pay for a loan. With that being said, these regional banks had the money in there. Anything above the $250 range, and they said, well, the federal government's going to come out and they're going to actually, at least Biden came out Monday morning before the stock market, and today is Tuesday, and stated that, hey, guess what? Well, he didn't say guess what. What he basically said is he wanted to instill confidence. What is he instilling confidence into? Basically stating that if you're a consumer, really you're not affected by this. You might have had some delays, but you're going to get your money back. Again, if you are a person who has a checking and savings account at one of these banks, you'll get your money back. However, that's not the case that I'm really making right now. So that allows anybody who knows the FDIC has it that you got $250,000 that you have, you'll get your money back. Anybody above that and any of the shareholders, now the shareholders of Signature Bank, the shareholders of Silicon Valley, they're out. They're not going to get their money back. But one thing I will tell you is that the individuals who had money above 250, first time in the history, at least that I can go back and I think of, that you got a situation where the United States government stated that the FDIC, just to instill confidence because they don't want a bank run. They know that now that social media has a magnitude of taken within 30 minutes. I mean, the halts that took place on Friday. And I can tell you, Friday traditionally was a down day in general. Traditionally, not always, but traditionally, there are down days. For the market to do what it did, for the regulatory body of the SEC not being able to catch it, well, it was banks were dropping at 25%. Now, this is a sign, whether they want to make this statement or not. We've been, in my personal opinion, we've been in a recession ever since about October 2021. We was in an entry stage. Normally, banks start to have their issues and start collapsing with regulatory situations. And right at the, I want to say, not necessarily in the middle of it, they start happening kind of early on. And then we see it take another 2 years before you start seeing the results of things changing. But this is about expected, because what the Feds did, as you may not know, is the Feds, prior to, when we go back to 2018, 2019, rates were really low. One of the things the banks do, they say is safe or treasury bills. But when it comes to banks, you know they don't have the money sitting in the account. So what they actually got to do is that they either got to raise capital or they got to sell assets. And the faster people go to the bank and withdraw money, and they was withdrawing massive amount of money. Silicon Valley, that's why these stocks were being halted. However, as these stocks were being halted and prices were capitulating, you have to understand, I mean, just overall, what it was signaling. It's signaling that our economy, the 500 basis points that the Fed hiked over the last, since Biden came in office. Because remember what they said before, during the last administration, if we raise rates, the market's going to collapse. Well, they did it. So I'll tell you something. They raised the rates, the market collapses. They said it, they doing it. Different administrations, different policies, so they pushing. But what I will tell you, though, is that we now see the results of the collapse, and we see the results of banks using the safest investments, which actually is, here's the safest investments, treasury bills. They were safe, considered safe, but now you have to ask yourself that question. Are treasury bills really safe, that if you bought treasury bills in the past and the social media can contact so many people at such a fast time to get them to move out of treasury bills? Because the banks, as you start to withdraw, they actually had to, Silicon Valley, Signature Bank, they literally had to start selling their assets. They could wait to maturity, then they wouldn't have a loss, but they didn't have a choice because they were already leveraged 80 to 85% of the, so think about this. You got $1 in there, okay? $1. The bank is lending out 85 cents of that $1 you have in the bank. So for every $1, they're leveraging out 85 cents. You get a bunch of people to go to the bank and start removing money. Now the bank has to start liquidating bonds at a cheaper rate, because back in 2018 and 2019, the treasury bills were they were really reduced. The Fed's raised rates. Treasury bills now got better rates than they did back in 2018, 2019, and 2020, and 2021, to be honest with you. After the October 2021, those rates started to adjust, but now they're even higher because they raised these rates. And as they raised those rates, the Fed did it by half, 50%, 500 basis points. You're seeing that this is a systematic situation. Just don't think that this just happened because yes, there is some hubris activity took place, but overall, this is a byproduct of poor regulation and also poor signaling. The Fed started raising these rates 500 basis points, knowing goodness well that these previous Treasury bill notes were really, really reduced in rates. It almost makes it worthless. The only way the banks can actually survive that is if the Fed didn't raise rates and they held those Treasury bills to the redemption date ends, because then they get their full pay. They don't have to worry about it. But what happens when you have a bank run? When you have a bank run and it's coming from the standpoint of hedge fund guys and CEOs saying, get your money out while you can, that's a whole different ballgame. So they can only raise capital or they can sell assets. And this all got pushed because the Feds raised rates and they were holding old Treasury bills and lower rate Treasury bills. Now, how do you handle this? Here's my question. Tomorrow, when I go through my stock watch list, I'm going to tell you how I'm navigating this whole situation in the middle of a recession, which I don't know how come they don't want to say that. For months, they didn't want to say the cerveza virus or whatever that virus, called the cock-a-doodle-doo virus. They said for over 2 years, it came from animals, it came from the wet market. Now our government and especially the FBI stated that, okay, it came out of the virus came out of a lab. Okay, they admitted that. They said years ago was no weapon. There was weapons of mass destructions in Iraq, but now we know there was no weapons of mass destruction in Iraq. They say we're not in a recession, guys. Can you really? Can you really? Now again, this is my opinion. Banks collapse in recessions. I don't know of any bank that ever collapsed in a non-recessionary period. We know that we go in the past, and in the past, people robbed banks, and because they didn't think banks were safe, that's what caused a run on the money. This is not that type of situation. This is strictly a situation with human error and hubris because they were too concentrated. But this is not the beginning. Like I said, there were banks in the UK, HSBC, sorry, the Chinese bank, which has all the issues in it. Again, the Chinese bank, HSBC, they bought assets recently. And then outside of that, you got the 4 banks that was halted, even Charles Schwab. I mean, it threw off Charles Schwab. Come on, Charles Schwab. They got halted too on Friday? Yes. Biden came out very shortly and said that they basically going to use money that comes from banks to bail the banks out. That's truly what they said. And is this, yes, they may not be making it right now on the taxpayers to foot this bill, but this is the second time since the Great Recession. Now we're in 2023 that they're actually solving the problems on the bank side. And you're not fixing the issue. You're just kicking it down the road. So I wanted to come out and thank everybody. If you've never liked, subscribe, or followed our channel, make sure you do so. Don't forget to hit the like. Don't forget to make sure you check out. We got a new episode coming up called The Slate. That's Nathan and Josue. I want to definitely make sure that you guys know that if you're another YouTube channel and you follow our channel, let's connect. And one of the greatest ways we grew as a channel is because we was connected to other YouTube channels that was bigger than ours. And if you want to act as well, grow, connect with us. We'll work together and we'll make sure that you grow like we grow. It's all about relationships. And I see you tomorrow when I go over my stock watch list. I'm going to tell you where I'm at, what I'm going, what I'm doing, and how I'm navigating this torrential situation in the market. Until next time, again, this is something that I chose to do. And it was, if you want to be honest, it's kind of random. But at the same time, I wanted to jump up to apologize because if you were checking on our channel, you was with me every Wednesday. You noticed the last 2 Wednesdays I was actually ill and sick. It took me some time to recover. I didn't have the virus, but I had another situation. I got food poisoning, to be quite honest with you. And that took a while. I've been food poisoning before something, you go to a cookout. But this time I got food poisoning. It was at a buffet place. I know what you guys are thinking. Primo, what was you doing at a buffet place? Eating that garbage. Well, I ate it with an associate and I'm paying for it. But I'm happy to tell you I'm back and well, feel a lot better. And I'll see you tomorrow as I go over my watch list.